Is the Cincinnati real estate market hot or not? Let's talk about that and June 2022 numbers right after this. Hi, I'm Rhonda with Comey & Shepherd Realtors here in Cincinnati, Ohio. And I know you've all been wondering, is it crashing? What's happening? So we're going to talk about the numbers and then we'll come right back to that. So in June, we sold 2,257 units. That was up 4% from May. Our lowest priced property was $13,500 and it was a kind of cabiny, like 1 bedroom, 1 bath, near Whitewater River in Harrison Township. Our highest priced property was Indian Hill, 7,500 square feet, 5 bedrooms, 8 bathrooms, lots of really cool things. The backyard was beautiful with a stocked pond. So it had, that newer updated style floor plan, and just everything about it was just on point. This house sold in one day at full asking, $3.4999 million. So our average sale is up 5% to 345. Our average days on market is still holding at 10, with that median being just 2. We have 1,664 units available, which is still only 3 weeks of inventory. So I said we would talk about the market itself and is it going to crash? Well, we have 3 weeks of inventory. It's not like white hot, like the floor is lava hot, where everything that you just throw on the market sells in 3 hours, but it's still only 3 weeks of inventory. So it's still a general seller's market. It's a good seller's market. We're still having 10,000 plus showings per week. The other really big thing to remember is an even market is 5 to 6 months of inventory. And again, that means if everything that's listed today, we sell it all off and nothing else comes on the market, how long does it take to sell everything? So again, an even market, 5 to 6 months. Right now, 3 weeks. So when we say like it's a little bit better, like it's a tiny bit better. We have been able to get some VA offers accepted, some FHA offers accepted. I've even had 2 buyers that asked for closing costs and got them. Here we go. This is changing. But as much as we can see history, the question is, how do we know what the future is going to bring? And we have a few ways. Number one, we can see what's going on the West Coast. They are seeing a shift from everybody that I've watched. They're seeing some changes, and they started seeing them about 6 to 8 weeks prior to us seeing them. And that is very normal. The other thing is, they told us interest rates were going to continue to go up multiple times this year. We can continue to expect those increases because they're trying to stave off inflation. And my understanding, because I don't watch the news, I have to hear it from other people, but my understanding is that inflation is still really high and not really budging. So expect additional rate increases. The stock market has also been, I think, doing this. I have a little app that I use. I invest micro amounts in the stock market because it scares me. And I see it goes up and down all the time. But what I'm hearing from clients is, my 401k doesn't look as good as it used to. Well, that can affect your decision to purchase. That can affect your down payment. That can affect what you see as your long-term outlook. So you may not want to spend as much today as you would have spent 2 points ago. Do you guys understand where I'm headed here? Every time it goes up, buying power decreases. And that is eventually going to have some sort of repercussions in pricing. You know who it's not going to affect? Cash buyers. And if we have enough of them, they will keep prices at the same level. It's when those people decide that they are not spending the money that we get price reductions. And we are seeing quite a few price reductions in this market. But I hear you. You've been watching the news and you are hearing that there's a crash, that prices are dropping. There's going to be all of these houses that are foreclosed on and they're going to come on the market. Well, that may be true in some areas. But here in Cincinnati, based on an analysis by CoreLogic, they are saying that Cincinnati has a very low chance of prices dropping. Now, that doesn't mean they won't drop in some areas or for certain types of properties. Obviously, things that are not in as good a shape or have something wrong with them, they're not going to go first, and they're not going to go as high as something that is grand and glorious and beautiful. But the chance of a crash at this point is still very, very low. There's equity in homes. People have seen so much of an increase in their home value that they have like all this money kind of sitting in their house. Now, if everybody goes out and gets a cash out refi, which is, by the way, in part what happened in 2008, which did increase kind of what happened with foreclosures and all of that. So what I'm going to tell you is banks are not going to probably be giving out money like water this time around. And most people at this point don't want to do a cash out refi because interest rates have risen. Does that make sense? All right. So low probability of prices coming down significantly. Still lots of demand, still lots of showings, still lots of equity and buying power for people who are already homeowners. I still predict that the market is going to stay strong as long as we have low inventory and high demand. All right. Well, let me know what you think and send us your questions and comments all down below. Remember to like, share, and subscribe this video, and we'll see you next month.